Welcome. Today we're diving into how you can invest your very first $100 the smart way. Whether you're a student, a young professional, or just starting your financial journey, this video will guide you through simple, practical steps to make your money work for you. Investing might sound intimidating, but with just $100, you can take your first step toward building wealth. Let's break down the basics, explore your options, and set you up for long-term success. Ready to see how far $100 can go? Let's get started on your investing journey together. Might wonder, is $100 really enough to start investing? Absolutely. The key is to start early and build good habits. Even small amounts can grow over time thanks to the power of compound interest. Starting with $100 helps you learn the ropes without risking too much. Plus, it's a manageable amount for most people. Remember, the most important step is getting started, not waiting until you have thousands. With the right approach, your first $100 can be the foundation for a lifetime of smart investing. Before you invest, it's important to understand risk. Every investment carries some level of risk, whether it's stocks, bonds, or even savings accounts. The key is to balance risk with potential reward. With $100, you can experiment and learn how you react to market ups and downs. This experience is valuable for your future investments. Remember, never invest money you can't afford to lose, and always do your research before making decisions. Setting clear goals is crucial before you invest. Ask yourself, what do you want to achieve with this $100? Are you saving for something specific or just looking to grow your money? Having a goal helps you choose the right investment strategy and stay motivated. Write down your goal and keep it in mind as you make decisions. This simple step can make a big difference in your investing journey. Before you invest, make sure you have an emergency fund. This is money set aside for unexpected expenses like car repairs or medical bills. Experts recommend having at least $500 to $1,000 saved before you start investing. If you don't have an emergency fund yet, consider saving your first $100 as a safety net. Once you're prepared, you can invest with more confidence and less stress. Now let's talk about where to invest your $100. There are many platforms available today, from traditional brokerages to modern investing apps. Look for platforms with low fees, easy-to-use interfaces, and educational resources. Many apps allow you to start with as little as $1, making them perfect for beginners. Take your time to compare options and pick one that fits your needs and comfort level. Stocks are one of the most popular ways to invest. When you buy a stock, you own a small piece of a company. Stocks can offer high returns, but they also come with higher risk. With $100, you can buy shares of companies you believe in or invest in fractional shares if the price is too high. Remember, diversification is key. Don't put all your money into one stock. Exchange-traded funds, or ETFs, are a great way to diversify with just $100. ETFs are baskets of stocks or bonds that you can buy like a single stock. They spread your risk across many companies, making them less risky than buying individual stocks. Many ETFs have low fees and are perfect for beginners. Consider starting with a broad market ETF to get exposure to a wide range of companies. If you're not sure where to start, Robo-Advisors can help. These are automated platforms that invest your money based on your goals and risk tolerance. You answer a few questions and the Robo-Advisor builds a portfolio for you. Many have low minimums and fees, making them ideal for your first $100. This hands-off approach is great for beginners who want to invest without the stress of picking stocks. Not ready for the stock market? Consider a high-yield savings account. These accounts offer higher interest rates than regular savings accounts, helping your $100 grow with minimal risk. While the returns are lower than stocks or ETFs, your money is safe and accessible. This is a great option if you want to keep your funds liquid while earning a bit more interest. Micro-investing apps make it easy to start with small amounts. These apps let you invest spare change or as little as $1 at a time. They often offer automatic investing and educational tools to help you learn as you go. With just $100, you can build a diversified portfolio over time. Micro-investing is perfect for beginners who want to start small and grow gradually. Fractional shares allow you to buy a portion of a stock even if you can't afford a full share. This means your $100 can be spread across several companies, increasing your diversification. Many investing platforms now offer fractional shares, making it easier than ever to own pieces of big-name companies. This is a smart way to get started with limited funds. Index funds are another beginner-friendly option. These funds track a specific market index like the S&P 500 and offer instant diversification. With $100, you can buy into an index fund through many online platforms. Index funds typically have low fees and are managed passively, which means you don't have to pick individual stocks. They're a solid choice for long-term growth. Bonds are loans you give to companies or governments in exchange for interest payments. They're generally less risky than stocks, making them a good option for conservative investors. With $100, you can invest in bond ETFs or government savings bonds. While returns are usually lower, bonds add stability to your portfolio and help balance out riskier investments. Peer-to-peer lending platforms let you lend your money directly to individuals or small businesses. In return, you earn interest on your loan. With $100, you can get started on many platforms, but be aware that this option carries higher risk. Always research the platform's reputation and understand the risks before investing. Peer-to-peer lending can offer higher returns, but it's important to diversify and not put all your money in one loan. Cryptocurrency is a hot topic, but it's also highly volatile. With $100, you can buy a small amount of popular cryptocurrencies like Bitcoin or Ethereum. However, prices can swing wildly, so only invest what you're willing to lose. Do your research, use reputable exchanges, and consider starting with a small portion of your $100 if you're curious about crypto. Sometimes the best investment is in yourself. Consider using your $100 to buy books, online courses, or attend workshops that teach you about investing or personal finance. Knowledge is a powerful tool that can help you make better decisions and grow your wealth over time. Investing in your education can pay off in ways that go far beyond your first $100. These can eat into your returns, especially when you're starting with a small amount. Look for investment platforms and funds with low or no fees. Even a 1% fee can make a big difference over time. Read the fine print and compare costs before you commit. Keeping fees low means more of your money stays invested and has the chance to grow. Unfortunately, scams are common in the investing world. Be wary of promises of guaranteed returns or investments that sound too good to be true. Stick with reputable platforms and always do your research. Protect your $100 by being cautious and skeptical of offers that seem unrealistic. Your safety is more important than quick profits. Automation can help you stay consistent with your investing. Many platforms let you set up automatic deposits so you can invest a little each month without thinking about it. This strategy, known as dollar cost averaging, helps you build wealth over time and reduces the impact of market ups and downs. Start with your first $100, then automate future contributions as your budget allows. Once you've invested your $100, keep track of your progress. Most platforms offer tools to monitor your portfolio's performance. Checking in regularly helps you stay motivated and learn how different investments behave. Don't stress over short-term ups and downs, focus on your long-term goals and celebrate your progress along the way. If your investments earn dividends or interest, consider reinvesting those earnings. This means using your returns to buy more shares, which can accelerate your growth over time. Many platforms offer automatic reinvestment options. Reinvesting helps your money compound, turning your first $100 into much more in the long run. Investing is a marathon, not a sprint. It's normal to see ups and downs in your portfolio, especially with small amounts. The key is to stay patient and stick to your plan. Over time, your $100 can grow into something much bigger if you stay consistent and avoid emotional decisions. Remember, time in the market beats timing the market. Everyone makes mistakes when they start investing. The important thing is to learn from them and keep improving. If you lose money or make a bad choice, don't get discouraged. Use it as a learning experience and adjust your strategy. The lessons you learn with your first $100 will help you make smarter decisions as you invest more in the future. The world of investing is always changing. Stay curious and keep learning by reading books, following financial news, and watching educational videos. The more you know, the better decisions you'll make. Investing your first $100 is just the beginning. Commit to ongoing education and you'll be well on your way to financial success. Diversification means spreading your money across different investments to reduce risk. With $100, you can diversify by using ETFs, index funds, or fractional shares. This way, if one investment doesn't perform well, others can help balance things out. Diversification is a key principle for building a strong, resilient portfolio. As you gain experience, review your investments regularly and make adjustments as needed. Your goals and risk tolerance may change over time, and your portfolio should reflect that. Don't be afraid to rebalance or try new strategies as you learn more. The flexibility to adapt is one of the keys to long-term investing success. Every step forward is worth celebrating. Whether your $100 grows by a few dollars or you simply stick to your plan, acknowledge your progress. Small wins build confidence and keep you motivated. Remember, investing is a journey and every milestone brings you closer to your financial goals. Once you're comfortable with your first $100, think about your next steps. Can you add more each month? Are there new investment options you want to explore? Setting new goals and increasing your contributions will help you build wealth faster. Use what you've learned so far to make informed decisions as you continue your investing journey. Investing your first $100 is a powerful step toward financial independence. Remember, it's not about the amount but the habits and knowledge you build along the way. Start small, stay consistent, and keep learning. Over time, your efforts will add up. Thanks for joining this journey. Here's to your smart investing future.